It's Thursday, the 17th of June 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. Superannuation funds are set for big annual returns as the share market hits another record high. That's our main story. Also coming up in today's podcast, around 2.2 million workers will receive a 2.5% pay rise, but some will have to wait until November to get it. A community-transmitted case of COVID in New South Wales has triggered fears of restrictions being imposed. And zero alcohol beer takes off as mainstream brews stagnate. Immediately after the podcast, stay listening for a chat about what directors and managers need to do about cyber risks. But first, here's a brief look at markets. The major indices across Wall Street fell overnight after the US Federal Reserve signalled a rate rise in 2023, earlier than previously forecast, to combat rising prices. While the central bank will keep a lid on interest rates for the time being, the consensus view is that tighter monetary policy will be needed earlier than expected, with 2 rate rises in 2023. The Fed also upped its growth forecast for the world's biggest economy to 7% this year. In afternoon trading, the S&P 500 and Dow Jones Industrial Average were both down around 1%, and the Nasdaq was off 0.7%. European markets were slightly higher, having traded before the US Fed announcement. The S&P ASX 200 is part of the main story, more of that in a moment. Oil prices were down slightly over the past 24 hours. The change in stance from the Federal Reserve hit gold prices, which fell to a 1-month low overnight. And the Aussie dollar fell sharply and is trading at 76.2 US cents. It came after the Federal Reserve's announcement, which sent the greenback much higher. The Australian share market hit another record peak yesterday and closed at its highest level ever, despite the mining companies falling as China attempted to put a lid on commodity prices. Investors have now pushed the benchmark index up 12% over the past 6 months, and with 2 weeks to go in the financial year, annual returns for superannuation funds are expected to be 15% plus, potentially outdoing the stellar return of 15.6% 8 years ago, and more than making up for the 0.6% average loss for median growth funds last year. Ahead of labour force figures due for release today and commentary from the Reserve Bank Governor Philip Lowe tonight, traders pushed the S&P ASX 200 up 7 points to finish at 7,386 points, after earlier in the day pushing beyond 7,400 points. The Commonwealth Bank rose again, up 1.3%, and is now the best performing major bank over the past year, up more than 50%. It's one of the most widely held stocks, meaning the gains in CBA translates to better returns in many investment portfolios, including super funds. Wesfarmers and Woolworths again hit records. The big miners were the laggards yesterday. China has upped its efforts to rein in raw material prices by expanding its oversight of trading by state firms. Beijing also said it would release the nation's reserves of base metals, including copper, aluminium and zinc. As the biggest importer in the world of many commodities, such as iron ore, China is doing everything it can to cap price rises. The share market is hot, and that's great for super funds, particularly those holding high levels of local equities. The 2 big asset classes held by millions of Australians are property and superannuation. The $8 trillion property market has risen sharply this year, just like the $3 trillion superannuation sector. This so-called wealth effect makes people feel better about their financial outlook, and that's great for the economy. In a moment, the rest of the news you need to know this morning. In overseas news, US President Joe Biden and Russian President Vladimir Putin have agreed to resume arms control talks and return ambassadors to each other's capitals after meeting for the first time overnight. Mr. Putin said the two had spoken the same language, but there was no friendship, rather a pragmatic dialogue between the two leaders. He wasn't sure if the relationship between the two countries would improve, though there was a glimpse of hope, he said. The Reserve Bank of New Zealand will focus on debt serviceability restrictions in an effort to cool the housing market. Earlier in the year, the central bank was given responsibility for the task of taking the heat out of the market, and it said an effective tool, alongside interest rates of course, was focusing on debt-to-income limits. Maybe that's a hint about what might happen in Australia if the housing market continues as it is. Fitch Ratings has upped its global economic growth and inflation forecasts, but expects consumer price increases will soften later this year. Fitch forecasts that the global economy will expand by more than 6% this year, driven by a pickup in the US. Next year, it expects the world economy to expand at a 4.3% pace. And the share price of Coca-Cola dropped yesterday on Wall Street after Cristiano Ronaldo, probably the best-known footballer in the world with 299 million followers on Instagram, pushed aside bottles of Coke in a press conference and encouraged people to drink water. One swipe and $4 billion was wiped from Coke's market cap before it recovered later in the day. Locally, the minimum wage for 2.2 million workers will rise by 2.5%, well above inflation, though some workers and sectors hit hard by the coronavirus crisis won't receive any increase until November. The Fair Work Commission raised the minimum rate from $19.84 an hour to $20.33 an hour, taking the minimum weekly wage to $772.60. The ACTU was seeking a rise of 3.5% or $26.38 a week. Employers wanted it capped at $8.30 a week and delayed until February next year for workers in COVID-stressed industries. Fair Work President Ian Ross said the decision took into account the markedly better economic environment and changes to the superannuation guarantee from 1 July this year, which will mean for the majority of workers, take-home pay will fall. Under the deal, increases won't be paid in the aviation, tourism and hospitality sectors and the fitness sector until November 1. Some retail workers won't receive an increase until September 1. The economic climate is such that the economy can afford a wage increase for the lowest remunerated. Many businesses use the minimum wage as a guide for other wages, so the 2.5% will flow through to many other positions. Wage rise for workers? The Reserve Bank won't mind that at all. Restrictions in Victoria have been eased with the 25-kilometre household boundary abolished, gyms allowed to reopen, and public gatherings of up to 12 people now permissible. It comes as 5 new community cases were reported yesterday in the state, including a Melbourne nurse who may have worked a shift while infectious. Meanwhile, in New South Wales, a 60-year-old man who transported international flight crews was infected, the state's first community-transmitted case in 40 days. A close contact of the man has also tested positive overnight. Several venues in Sydney's east are now on high alert. Prime Minister Scott Morrison said the troubled $90 billion program to buy 12 French-designed submarines had improved after meeting with French President Emmanuel Macron in Paris. Mr Morrison said discussions had been candid, adding there was still a long way to go. The contracts have been dogged by cost blowouts and criticism about the lack of Australian involvement in building the attack-class subs. The two sides have until September to get things back on track. That's when the cost of terminating the contract rises from €90 million to €250 million. The Morrison government's signature superannuation reforms are likely to pass the Senate in time for a 1 July kick-off, after gaining the support of crossbenchers, One Nation and Centre Alliance. The Your Future, Your Super legislation includes changes to annual performance tests for super funds, a requirement that spending is motivated by the best financial interests of members, and a stapling mechanism which will allow employees to automatically keep their super fund when switching jobs. The bill does not include provisions that would have allowed the Federal Treasurer to ban investments made by a fund, after that section was dumped to win Senate support. The federal government will introduce a visa scheme for workers from Southeast Asia that allows 9 months of work a year for 3 years before a person has to return home. The visa, which is in addition to the Pacific Island visa scheme, is part of an effort to attract seasonal workers to Australia to help in the agricultural sector. Insurance Australia Group said it will have to pay out around $730 million in claims this financial year as a result of the violent storms that hit Melbourne last week. That was more than the company had previously estimated and follows 4,300 claims made up until Tuesday. Insurance Australia's share price rose more than 1% yesterday. McDonald's Australia celebrated its 50th anniversary in their country yesterday, having opened in Naguna in Sydney's west back in 1971. The Australian business created the McCafe concept in 1993. That's what it's famous for, and that's since been exported around the world. McDonald's wants to open another 27 stores across the country this year and 100 over the next 3 years. The $600 million plan will focus on drive-through, delivery and digital sales, all parts of the hamburger chain's business that did well during the pandemic. McDonald's revenue in Australia last year was $1.7 billion and net profit was $206 million. The weekly ANZ Roy Morgan Consumer Confidence Index rose slightly this week, undoubtedly helped by the end of the lockdown in Victoria. Head of Australian Economics at ANZ, David Plank, said he didn't expect the Melbourne lockdowns to have a long-term consequence for the economy. The zero alcohol beer segment is growing faster than any other category, according to the boss of Asahi Beverages, Australia's biggest beer business. While the mainstream beer market has stagnated, craft beers are growing at an 8% clip, and zero alcohol beers are expanding at a 30% pace, albeit off a lower base, according to a report in the Financial Review. Carlton Zero and Great Northern Zero are among the most popular brands in the segment. Asahi bought out Carlton and United Breweries a year ago for $16 billion. A major investor group has started looking into the credentials of non-executive directors serving on Australian energy companies, questioning whether stacking groups with oil and gas veterans was appropriate given climate pressures. According to a report in The Australian, the Climate Act 100 Plus group said shareholders were concerned that the boards of energy producers might be poorly equipped to cut emissions and move into new, less carbon-heavy areas. I'm not sure where the news is in this next story, but anyway, the Australian Bureau of Statistics Household Survey shows that women are more likely than men to have spent time on unpaid indoor housework, cooking, and the supervision of children. Almost 2/3 of women spent 5 hours or more in unpaid work in the 10 days till May 23 this year, and about 35% of men. And toy giant Mattel has honoured former Federal Foreign Minister Julie Bishop with her own Barbie doll. Dressed in deep blue with a shock of blonde hair, Ms. Bishop has been honoured as Barbie's official role model for Australia in 2021. Congratulations, Julie Bishop. Up next is the Fear and Greed Daily interview, and anyone involved in business needs to listen to this one. I'm talking to Courtney Brown, an expert in cyber risk and governance. She's got a practical guide to what directors and executives need to be doing right now to limit their exposure to cyber attack. There have been some very prominent examples both in Australia and internationally of companies being severely damaged by cyber criminals, so it's a very timely conversation. That's up next in the Fear and Greed playlist. It's Thursday, the 17th of June 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.